Hi and welcome to the weekly market view, and once again Bill is with me. Good to see you, Bill. What have you been doing the last week?
Freezing.
Yeah, it's pretty cold now actually. Of course you're right out in the countryside. I should imagine it's even colder there.
I mean, it's really nice. I mean, with all the farmland, we have the biggest ice rink in Wiltshire County.
Excellent. Well, no doubt your ice skating is tip-top form.
Yes.
But let's move on to the markets, and really we've seen this sort of consolidatory phase for certainly the FTSE. It doesn't seem to want to break through to the downside. It doesn't seem to want to break through to the upside. We seem to be very much sort of locked horns, not able to go anywhere. But Bank of America, Merrill Lynch have sort of coined a bit of a phrase, the great rotation, out of bonds into equities. I believe you mentioned this last week or the week before. Do you see that still going on?
I guess my feeling is when anybody says something like that, have they already done the trade? Because I mean, one thing we did see, I think it was in the FT over the weekend, like 22 billion, I don't know whether it was dollars or pounds, has gone into the stock market. And I think we started to see that probably from the second half of last year when we saw the gilt, like at the lowest level, 10-year gilt since what, 1690. You may have started seeing some rotation out of the bond markets then, feeling we probably were at the end of the interest rate cycle. So I think one of the things that you see, maybe a lot of that money's been done, but one of the things, and we had Bernanke's comments last night, saying that he's now concerned about with historically low interest rates. Yes, he was talking about the States, but you could infer anywhere in the world. How many people, how many funds are buying junk bonds, cheap property, land, etc., because mortgage rates are so low. And one of the things to look at, I was talking to a friend this morning, whose name I won't mention, but we were talking about, and I asked him, I said, what happens with the Treasury 10-year? 2%, 2.25%, 2.5%? He said, you get me anywhere close to 2.25%, I'll buy everything you got. Because remember, the Federal Reserve will probably do another $1 trillion worth of buyback. So it's like anywhere else. I'm not going to get in the way of the Fed, because they're bigger than we are. So I think a lot of that rotation has been done. And as you just said, we're really in very tight technical levels, and most of the indices just don't want to see it budge.
Yeah, so it sounds like your friend obviously is still very bullish of the bond market as well.
Yes.
And I suppose that when you see headlines like that as well, this great rotation, you're right, you kind of have to sort of set off a few alarm bells.
Yes.
Because of course it's usually the retail clients and the less professional
They've already talked to their institutional clients and they're out of that trade.
Well, that's it, they're out, and then the retail piles in and it's too late.
And I think one of the things that we saw yesterday, again, the PPI number, much lower than expected. Also, the simple fact is, even over here, we talk in the UK, we're talking about the reason we're still at 2.2, 2.4% inflation is these university fees. Well, 6 months from now, those university fees, they fall out of the rotation, okay? And we get a new governor the 1st of July. So my feeling is, inflation is not a problem here because the consumer is really getting squeezed. And also, you go back to the States. Remember, in the US, most people are paid twice a month, okay? So the first paycheck in January came last week. So if you were, quote, an average wage earner in the States, you were $45 worse off, okay? Just because of the implementation of the new tax rises. And over here, it's a question of, whether you're buying beef burgers from whoever or petrol, etc., etc. And one of the things to look at, I think, it's one of the consumer groups says, credit cards were used. More credit cards were used in December of this year in history. So after the 15th of the month, a lot of these people are going to say, I spent this much.
Quite a lot of deflationary pressures. And I suppose that's obviously why clients still insist on selling the FTSE in particular, and they still remain very short. And actually, we've seen a bounce today, but yet the FTSE just still can't seem to go through that resistance.
What do you mean now, 6,100?
61, sort of 35 or something. So, okay, well it's been a quiet week anyway, and I suppose that goes some way to sort of explain why we're stuck in this narrow range. Going forward, inauguration of President Obama next week.
Yes.
Now things seem to be heating up a little bit again there on these fiscal debates, the ceiling and the spending
and I think it'll be quite interesting because this will give him, quote, a global forum, okay? It's a question of, yes, President Obama, what are you going to do in the next 4 years? Well, you know what he's going to do, okay? Fiscal cliff, debt ceiling, probably something in reference to an independent gun law. But I mean, here is a real chance to start naming names and say, well, so-and-so and so-and-so, you didn't vote for this and you didn't vote for that. You've got to think of America as being an entire country rather than just your local district. So I could easily see that coming. But I can't tell you how many people I've talked to just in the past week who've now come back to work, feeling that they're not concerned about fiscal cliff 2. They're not, talked about it. And I've been in the market now for 40 odd years. Every year it's like, oh, what's going to happen with the U.S.? Will they roll over the debt ceiling? I mean, at one point, I don't know which, but it was in the first term of President Clinton, the U.S. didn't roll it over. And so, quote, the U.S. was bankrupt for 6 weeks. Didn't stop anybody, didn't stop the Japanese, didn't stop the Chinese buying bonds. So it's a question of, you're still going to see central banks buying bonds. It's safe haven, continue to buy gold. But it's a question of, with the deflation as it is, you'll still see major institutions. I think a lot of the bond selling was in late third and fourth, say mid-third to mid-fourth quarter of last year. Now we're watching and waiting, and as I say, any more deflationary numbers, Treasury 10-year, as I say, gets to 2.25. I know one major buyer, and it's not the Fed, says, I'll take some of those at 2.25.
Well, very interesting. So there's also that political risk as well. Well, thanks very much again, Bill, for your views, and we look forward to next week. Let's hope you wrap up warm.
I hope so.
Thanks very much.
Thanks.